I'm about to expose how retail concept traders got played 2 times trading GBP/USD, and I'm going to go ahead and compare it to what institutional and SMC traders were seeing at the time. Before I even drop this video, don't be coming at me with your nonsense. I know there's tons of you out there who, whenever I drop videos like this, you guys be in my DMs, you guys be in my comments, and you're there just chatting. All I'm trying to do is expose these false moves one video at a time. I'm not saying there is one strategy that beats everything, because we know that there's some retail concept traders who win trading those kind of concepts. I traded retail concepts for quite some time, and your boy got absolutely smacked around the markets. You guys can hear what I say and absolutely just say, you know what, this man's chatting rubbish. But at the same time, look, I can guarantee you that once you sit through this video, you're gonna get some nuggets. So let's get into the video. Okay, so I'm gonna put my annotations on real quick. There we go. So first of all, I'm gonna show you guys some of the things retail would have been seeing at this point, and I'm gonna run through that quite quickly. Okay, so first of all, we know that it is a new week. You can see the NW at the bottom. This is a new day, so this is Tuesday, that's Monday's price action, and you can see prices going sideways. Retail would have seen that there's some kind of resistance here. They would have seen some more support and resistance down here, and another thing they would have seen are these lows forming. Retail could play this 2 ways, and I'm going to show you how in 2 ways they would have been played. After price responded off of this resistance zone and then broke back through support, they would have been looking for a break and retest, and this would have been maybe a really small short opportunity to take it down to the downside, whether it was to be to this trend line or whether they were expecting price to break lower. The first time they would look to enter is this sell here. When price returns to it, they would have got the break and retest action at the support and resistance level, and they would have put their stop loss anywhere between 10 pips to 30 pips. So let's just go 30 pips, or even at this high here, 33 pips. So first of all, the risk reward would have been dead if this was a 33 pip move. So I'm gonna give them the benefit of the doubt and say they went for above these highs. Regardless, it's still 10 to 30 pips is what it is. And what they would have done is they would have targeted maybe either the trend line itself for a 1-to-1 trade, or they would have targeted maybe a 1-to-2. But at the same time, don't forget, if price was to break and retest this area here, don't look to target all these different lows. They look to target various different support zones. So, you know, you have a support zone here that they could look to target. They have another one at the very low down here. And so this is what they're looking to target. Ultimately, this could be a very juicy move. And it looks like that to the eye, because your eye is going to show you that it can literally do something like this. But there's a reason why price tends to not respect this kind of setup. And I'm going to show you that later on too. Now, we've got our idea. We're not saying we're going all the way down here, but let's just say we want to go down to these lows if we break this trend line here. So I'm gonna hit play a few times to show you guys what happened. So now this is where price taps into the trend line. Price taps into the trend line here, and I'm going to be breaking down what other retail concept traders would have been doing at this time as well. But I'm going to play it one bar at a time. We're still looking for that entry for retail. Retail is still looking for that entry at the moment. So now this is where retail get their entry. They get their entry at the support zone over here, the moment price taps back into it, and they're in the trade now. And like I said, they might be looking for a 1-to-1. If they did, hats off to them. That's all good. But if price was to break the trend line, they're going to be looking for a deeper level of support. So something like this. So I'm gonna hit play again. There we go. It does a break and retest. Some people would have entered from here too at the break and retest of the trend line, because now this is time for price to get down to its level. They would have put their stop loss anywhere between 10 to 30 pips again. So let's just leave it here about 15 pips. And like I said, they would have been targeting a structural point. So now I'm gonna hit play again. There we go. Price starts moving to its level. As you guys can see, it comes back to their entry again. These people here who would have had a tight stop loss would have been taken out at this time. Don't forget, they're still waiting for price to get down to this level to take TP at. But these guys have been stopped out. The ones who had a stop loss above the support zone and above this high. So those got stopped out. These guys here who went for 1-to-1, let's just say they won, that's good, but who's going for 1-to-1 these days? There ain't no retail trader going for 1-to-1. If you trade 1-to-1s, I need to know in the comments, because I don't believe anyone trades 1-to-1s nowadays. So these people here who are going for this structural point, potentially 1 to 3.5 trade, now they're stopped out. So that's the first set of retail traders. Let's go back down to here now. So that was the retail traders who were of the selling mindset at that point. Now when it comes to the retail traders who were of the buying mindset, they would have looked to jump in on this trend line activity from when they got a rejection candle away from it. And so this is that rejection candle. Price would have closed here. They would have entered in here, maybe potentially targeting this high, maybe a 1-to-2. They would have put their stop loss 10 to 30 pips within this range over here. So let's just go for a 30 pip stop loss. And so this is what they would have done, and they would have potentially gone for either a 1-to-2, which is, let's just say a 1-to-2 around here, or look for the next structural point, which is roughly about here as well. So let me just drop another support and resistance level. It lines up with the 1-to-2, so they're blessed, they're Gucci. So once again, look what happens. We're gonna hit play again. They're instantly in drawdown. Price takes them out, as you can see right here. So that's a 1 to 30 pip stop loss. look, if you had this stop loss, that's all good for you. I don't know retail traders who are doing 40 plus pip stop losses is way too much. The general idea is within 10 to 30 pips. And so this is where you would have been taken out. I just explained to you guys how retail concept traders who were of the buying and selling mindset would have been played. Now I'm going to show you guys what institutional and smart money concept traders would have seen at the time. So we're going to get rid of all of this because you know institutional and smart money traders do not trade support and resistance. And once again, some of you trade support and resistance and some of you get your bag, and that's all blessed, that's all good for you. But me, this has never worked. So now when it comes to what institutional and smart money traders are seeing at the time. So first of all, we know that price is traded into a daily imbalance over here. So most likely price is going to want to push up to the upside, even if it's just for a little bit. We're not saying price is going to stop trading deep into this imbalance here. So let me quickly show you that daily imbalance real quick. This kind of sits high and that kind of sits low. They don't trade into each other. So there's inefficiency here. So price could potentially look to push up to the upside. I'm not saying that it's going to stop here, but there's going to be a potential push up higher. So now when we go back to the 5-minute time frame, we understand where we are in price. We are trading within a daily imbalance and price could go up to the upside. We don't see this as some kind of support zone. This relative equal highs, when they take it on Tuesday, this is a running of liquidity. Price runs above that high, takes the money and stops people out. At the same time, any single person who's doing breakout buying would have been activated for buy orders to go up to the upside. Price drags them into the range and they get stopped out. So they're going to potentially have stop losses anywhere between this low and this high. They get taken out here. The moment price takes out this low here, now price has produced an up close candle here, an institutional candle here. So this is my up close candle. So now I'm going to be looking for a potential move up higher into the institutional candle before looking to take it to the downside. So when price is trading lower, look, they left an imbalance over here. So this is where I'm expecting price to drop from. Not only that, I'm expecting price to drop to where I identify that there's a potential retail trend line building up. But at the same time, I also know that we're moving within consolidation. So I can't be expecting the most from this pair. I'm going to look for an opportunity to scalp this pair into the retail liquidity. That liquidity pool is here. I don't need to go for the whole thing. I just need price to tap into that. Also, another thing I'm looking at is this. Don't forget, I'm looking to scalp this into that liquidity pool and be out the markets because I know this is consolidation. You don't want to be trying to hold during consolidation. You need to be in and out the markets. And then another thing I identify is this. We have a down close candle here. I've just highlighted it as my last down close candle. From this high to this low, that's a down close candle. So now I have a potential area to TP at. I'm going to go ahead and mark it up for you guys over here. And when it comes to entry, let me quickly show you guys what we were working with. I will show you guys the execution at the end of the video. I did try to jump in from the imbalance. I was trying to catch it on TradingView, but TradingView was doing the most, and so I ended up catching it a little bit lower, and I put my stop loss above this kind of 6 high, so thereabouts the imbalance high, and I targeted the very high of the institutional candle. This is an institutional candle because look, price consolidates here, they go sideways, they run out these lows over here, and then they push off to the upside. That's the institutional play. Cool. So now I'm going to go ahead and hit play. There we go. You can see price runs that trend line. That's good. I know we're tapping into that liquidity pool, but it's institutional candle to institutional candle. My favorite setup is an institutional candle setup to another institutional candle setup. So look, we run that. They give them the break and retest. They give them the response of the retail trend line. Now let's hit play some more. There you go. This is where I hit TP. We go straight into the very high. And the reason I go into the very high, you could go to the very body. So I'm going to go ahead and mark that for you guys real quick. The body of that down close candles here. You see how they just came shy of the body? So this is why I always go for the wicks, because price is most likely going to hit the wick, the very wick high. And so this is why I TP at the wick. This is where I close off the full position. Well, it just hit TP really. This was roughly about a 1 to 6 hour trade, a very beautiful trade. When price was moving in my favor, I actually left the screens because I got really busy. I had other things to do, and then price hit my TP whilst I was doing my other activities. I didn't get active with any buys here. I'm good for the day. I've just made a 1 to 6. Now I'm going to show you guys my executions for this trade right here. So I've just put on my executions. You can see this is where I look to enter. Like I said, I did try to enter for the imbalance, but it was just taking too long in TradingView. And then I took my full trade off right at the low. There's an arrow that's going to pop up here. You can see if I just hover over this up arrow, you can see if you look just above it, you can see where I closed off the full position too. So that was a very, very blessed move. And for those who were looking to get bullish there, you could have got bullish when price traded down into this institutional candle here. You would have probably had about a 15 pip stop loss and then taken price to the upside. Peace.